Thanks for being here. Last time we spoke, I mean, you're always trying to find the opportunities, even in volatile markets. What are you finding lately?
Well, we're in a very interesting time right now. As you just did the interview talking about the Fed right now, no one has an understanding of what the Fed's ultimately going to do. I'm going to tell you that Jerome Powell's a lot more dovish than he's hawkish. And so I think he's putting on a tough face right now because he has to. Why? The markets are at record highs, basically. I mean, yes, we're off of those, but we've hit, 2 years in a row, double-digit returns better than 20%. You got to cool off at some point. That's a part of a market cycle. But here's reality. I think the Fed's been wrong on inflation. I think that we have big systemic challenges that they cannot affect. I mean, just think about, your home and auto insurance and the costs that have been going up. That doesn't change with the Fed raising or lowering rates. The challenge that we have right now is that the consumer is being squeezed in a way because they've ultimately been fighting inflation with credit cards. And so as we continue to progress on, I just see a liquidity crisis showing up as, the quote unquote lag effect from all of these rate hikes that went way further than expected, way further than advertised by the Fed. Ultimately, they show up at some point in time, and I think it hits like a ton of bricks, and then it's at that point in time that the Fed will start cutting, they'll accommodate, and that's when we're really off to the races and growing again.
There was a time that people thought the Fed may even that Monday, you remember that Monday, what was that, April 7th, I think it was, where people thought maybe the Fed would step in and just cut rates that day. Do you think the Fed should have cut already?
Yes and no. I mean, they're in a tough spot right now. Ultimately, they have, quote unquote, control of the narrative, at least from the market standpoint. And, hey, that's okay. Here's where they don't have control. There's $9.6 trillion that over the next 12 months need to be remetabolized. They either need to be paid off or refinanced. You can't do that when we're sitting here at 7+% on a 30-year mortgage. You can't do that when we're literally at 3 and 4% higher than we were before. For every 1% that we increase in interest rates, it takes 10% more income. So unless you're making 40% more, then I don't think that you can afford the same loans as previous. So we've got to come down on these rates. Otherwise, the economy really stalls out. We're going to have a big challenge in real estate specifically, but also in bonds and liquidity. And I think you're going to see a ton of strategic bankruptcies and potentially even bank failures as the year continues to go forward and into 2026.
Do you feel like there's opportunity in certain sectors like metals, for example?
Yeah, exactly. What's happening right now is that the world is hardening up their balance sheets. So whether it's gold, silver, Bitcoin, these are ideas that are really important. And so, you can invest in the precious metal directly in gold and silver. And I would encourage you to do that with an emphasis on silver, given the 100-to-1 ratio of silver to gold in price right now. But the mining ratio is almost 7-to-1, slightly less actually than 7-to-1 real supply and demand. So that's an opportunity for those that just paid attention. But the metal miners have not gone up in value relative to the increases in gold. They're not even hedging their gold production anymore like they were in previous times. And so this is a new trend because guess what? You got those same amount of ounces in the ground and relatively similar input costs to create that gold. Well, the profits on these metal miners is looking like it's better than in any other time. And so I think that in the next 3 and 5 years, you're going to be finding that metal miners, very specifically concentrated in North America and, in things like copper, lithium, uranium, things that are going to help us to electrify our world, ultimately putting us in a better position to, manufacture here in the United States and, have that beautiful made in the USA, which I remember seeing when I was a kid.
Right, understood. So just what would be the trade? I want to get to the infrastructure stocks, but can you sort of name what you would be buying and whether it's a certain miner or how you would go about buying this and make the move?
Sure, absolutely. Well, if I'm talking about the miners right now, so one of the largest, U.S. copper producers is called Freeport McMoRan. So FCX. These guys are deeply tied to the infrastructure of a nation and rebuilding, but they're also doing it in a way that's a little bit cleaner. And so I think that that's going to find them a little bit of positive energy here in a market right now that's kind of crowded. Cameco, CCJ, they're a global leader in uranium mining. Uranium and specifically getting into nuclear through small modular reactors is likely one of the ways that we're going to be able to balance out the base load inside of energy. You know, if you start producing more systems in the Midwest, you've got to come up with more energy somehow. And so we're going to probably need things like small modular reactors and more uranium from Cameco to be able to do some of that stuff. Rio Tinto is another one. Major global miner, massive U.S. copper projects underway right now in Arizona. So my goal here is to say long term, you know, it takes a minute to establish a mine. But here's the reality. You can't just go and print it. What we're doing right now is we're having to produce things in a way, re-electrify and get strategic here about these metals and these things that we're ultimately working with.
Right, understood. You also had, you know, you liked silver and gold, you liked Nucor, U.S. Steel, also the Global ex-U.S. Infrastructure ETF, PAVE, just to name a few, and also the ETF LIT. David Stryzewski, it's great to chat with you. Thank you so much, CEO of Sound Planning Group.